You are listening to Mining Stock Education.
There's going to be a massive squeeze on purified phosphoric acid. And people are going to wake up to the fact that even all the lithium in the world is not going to save you unless you got the P. Well, you can't make LFP without the P. And can you imagine if a small company, First Phosphate, is able to do this? What is our value? What is our valuation worth? This is why you're commenting about the share price. I mean, or the share appreciation. People are starting to wake up to the fact that, wow, this is important.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thanks for tuning in. And in today's show, you're going to hear from a new sponsor that we're going to be covering over the next year. The company is First Phosphate. I'm joined by its CEO, founder, and director, John Passalacqua. Now, that name may sound familiar because about 2 weeks ago when I interviewed Gianni Kovacevic, he's a pro speculator. He brought this company up as one of his new speculations, and we talked about that on the show. The share price at that time was about 70 cents. As I'm chatting with John today, it's about $1, so it's trending in the right direction. We're going to find out why. I also became an investor in the last 2 weeks after a meeting and speaking with John. So, John, thanks for coming on the show. As I mentioned, my listeners already heard about the company, but they haven't heard from the CEO yet. So let's start off with a thumbnail overview of the value proposition that your company presents to investors, please.
Yeah, thanks, Bill. So, First Phosphate is a really unique company. We are phosphate, igneous, pure, high-purity phosphate, but only for the lithium iron phosphate battery industry. We have nothing to do with fertilizer, nor do we want anything to do with fertilizer. And that's really rare because anybody else pretty much on the planet in the Western world that's involved in phosphate, it's usually something to do with fertilizer. And that's usually because the biggest market to date has been fertilizer or food. And now, with the LFP battery, things are changing quite quickly. So we have a very promising igneous phosphate project in Quebec dedicated just to LFP battery, to getting downstream and into creating, LFP batteries such as this one, which we created with our igneous phosphate feedstock from the Bégin-Lamarche property in Quebec.
So the LFP, that's lithium, iron, and phosphate, just to make this simple for those that don't know. And you need a higher purity phosphate in order to go into that battery. And one of the uniquenesses of your deposit is it's igneous. It's not sedimentary. So you're able to produce the higher purity phosphate.
Yeah, Bill, you hit on a really good point because with sedimentary phosphate, which is over 95% of the phosphate reserves in the world, that's basically got the purity for fertilizer grade phosphate. You can usually skim a portion off the top, 10, 20, maximum 30% for purified phosphoric acid, but the rest has to go back into fertilizer. So anybody that's dealing with sedimentary rock is first and foremost a fertilizer producer. And many don't even have the ability to go up into purified phosphoric acid. But when you're dealing with igneous phosphate rock, which is extremely rare, about 90 to 95% of it converts directly into purified phosphoric acid for battery. So we're able to just go directly into a battery type scenario without having to pass through the commoditized fertilizer world, which is extremely important because it's also two very different segments, right? Fertilizer and high technology. So we get to hit the high technology market running right away.
And what is the price differential at the commodity price between the fertilizer and the high technology value of phosphate?
Yeah, so at the fertilizer level, usually you're dealing in what's called merchant grade phosphoric acid. That's usually sold somewhere in between $800 to $1,200 per ton. Purified phosphoric acid is very off-take-ish. It's very small a segment. It's hard to price. There's no official real pricing out there, but it can go anywhere from about $1,500 USD to about $2,500. And we believe that that's going to be where the massive price spike is going to be as it becomes very rare. Because you got to understand, purified phosphoric acid is already used in a lot of other things, such as in carbonated beverages or toothpaste. You'll find it in Coca-Cola, Colgate. You'll find it in baked goods. You'll find it in water treatment, fire extinguishers, cosmetics, pharmaceuticals, baked goods. The list goes on and on. So that market is already in equilibrium. Everything that we need to create now for the LFP battery needs to be new production.
So we're going to get into your deposit and the specifics of it. You've already put some preliminary economics on it, but let's preface to that by saying, do you need a strong performing phosphate price in order for your project to make sense? How dependent are you on the greater macro narrative and macro forces that are out there in terms of the LFP batteries?
Yeah, I mean, look, it's really about purified phosphoric acid, and that market sort of, in a sense, decouples from the fertilizer markets, especially when we're dealing with this high purity igneous rock, that goes directly into purified phosphoric acid. We're not really so subject to fertilizer pricing, though, of course, the base fertilizer pricing, which is 95% of the world's phosphate pricing, does affect it to some degree. But we're very happy to be sheltered from that with the igneous rock, and into high technology, which is completely different market.
So what is your history with First Phosphate? How did you get here, John? Tell the listeners a little bit about your background.
Well, I call it the scientific error. We were I was an investor, and we had a shell company. We were looking for phosphate for fertilizer at the time. This was when the war broke out between Russia and the Ukraine, and basically what we ended up finding was high purity igneous phosphate. Everyone said, "Oh, it's too pure. Nobody needs it. It's too pure for the fertilizer markets." And then I started seeing this thing called the LFP battery. I'm like, wait a minute here. One man's trash is another man's treasure. So we bought up all these claims in Saguenay-Lac-Saint-Jean, Quebec, and we started to develop this as a primary source for LFP battery. We actually created the category, really, knowing enough about technology and enough about phosphate. We said, there's something here. So it was, we discovered it quite by chance.
And then you saw that opportunity, you purchased it. Are there any royalties or encumbrance on the deposit?
Well, this is another great thing, Bill. So everything was just so non-valued or undervalued that we were able to buy everything and all the NSRs and everything else. We got no NSRs on the property, nothing. We did a lot of our staking ourselves as well. So yeah, that's just perfect.
And you've run the company as an owner. Tell listeners a little bit about how you've approached leadership.
Yeah, I mean, look, I've run my own family office for a long time. I've been in the financial business for a number of years. So, I guess with a lot of your listeners, right? Sometimes you got a great project, and sometimes management lets you down. So I had a lot of management letdowns in some of my investing. So we got together a group of associates, and we founded the company. Not only did we found the company, but we put up our own money. I mean, I've got up to $2 million of my own money into the project already. Our other founders and board and management have probably got just about as much as well. And we founded the company, and then we decided that we had to pick somebody for the management role as CEO, and so I was picked, and I didn't think I'd like it too much, but I actually kind of really like it. I really like what we're doing. I really like the ability to affect change, and just to be able to get up every morning and do good by our shareholders. So we've got a very tight team. Our board and our management is very tight. We've got 25% of the shares still. We've invested a lot in many of the rounds. We buy a lot of stock in the market. We bought a lot of stock in early January, February, whenever we thought the world was falling apart with Trump tariffs. And also another important thing for your listeners to know is that we get paid fully in RSUs for the most part, the board and the management. And the reason we do that is because it was very tough to raise capital in over the last cycle. And so we thought it was really important to maintain and preserve cash flow, and also we like to be more deeply invested in this. We see a massive opportunity in this, which I guess we'll get into, right? But you release the P and LFP. It just, you can't find it anywhere. Everyone's invested in 200 to 300 lithium stories out there, which is great. But LFP, right? Lithium. Then there's the iron. We know it's scarce, but it's available. Where are you going to get the P? So we think that the P is so important that you can't even unlock the L without the P. And that's why we're sitting here. We just see, just a massive potential here. And the market's just starting to understand this now.
Your project is about 2.5 hours north of Quebec City in Quebec. Does the Canadian government acknowledge phosphate as a critical metal?
Yeah, that's what has happened. So Quebec acknowledged it first about a year and a half ago. Then the federal government of Canada acknowledged it about a year ago. And believe it or not, the government of the USA just announced phosphate making their critical mineral list a couple of months ago. And it's also a critical mineral in Europe. So finally, we're well covered off, because they didn't tend to move a little bit slow. But, now it's all there.
So after you got all the claims for the project, you've raised over $40 million. You've advanced it over the last 3 years. One of the things I was impressed with, you were able to lay out and hit milestones over the last 3 years, even raise money in tougher markets. Bring listeners through the last 3 years of what you've been able to accomplish.
Yeah. So, I mean, we started the segment we took this igneous phosphate and we've been able to purify it up to purified phosphoric acid. We got our partner, which is an industry leader in the world, Prayon Technology, they're Belgium. Our partner has been able to purify the rock and be basically able to show that this rock is of such high purity and that it can make purified phosphoric acid. And then we've been able with some other partners to get it right into the LFP battery. We've been able to create the first LFP batteries in North America in 25 years, fully of North American critical minerals, of which are phosphate and our secondary iron recovery. This is a major milestone, major partners at the table as well. And so we've been able to do all that. We've been able to advance our mineral resource estimate. We've got through our PEA showing very strong economics. And now we're moving into our feasibility study. We're doing the final drilling program right now, the last 35,000 meters, which is a massive drill campaign. It's probably one of the biggest in Quebec or Canada at the moment. So that'll be finished in April. And then from there, we're moving directly into our feasibility study at the end of the year.
So the economics on the PEA, could you share with listeners some of those basic economics you laid out?
Yeah, the economics are quite good. So right now, phosphate prices are pretty much at very low, the lowest they've been in about 5 years. They've been double to triple what they are now, especially for igneous phosphate. So at these lower levels, we have an NPV of $2.1 billion and an IRR of 37%, a payback of 2.9 years, with a strip ratio of about 1.5 to 1. And to give listeners an idea of what we can supply about 350 gigawatt hours with our phosphate of LFP battery, which would equate to about electrifying half the fleet of new vehicles in North America over the next 25 to 40 years.
And what about the growth potential for the deposit?
The deposit is fully open at depth. We've only gone down 300 meters. Usually these deposits can go down about 1.5 kilometers. It's an open pit mine. It's very close to infrastructure such as hydro and also major roads. And so, basically, yeah, there's potential to go for, beyond the 40, 50 year scope. And we've also got another property, Lac Lorignal, which is a little bit further away, which is also in PEA, which shows pretty good economics as well, and a number of other claims and everything hosted in the area. But I just want to make it clear to listeners, right? It's really important to walk before you run and to just get one property up and running properly. And that's what we're looking to do with Bégin-Lamarche property. It's got a capex that's very reasonable. It's under $500 million US. We've got a letter of interest from the EXIM Bank, Export-Import Bank of the United States, for $170 million of that. I've got letters of interest from the Quebec government. Also, our local Indigenous group is very interested in funding potentially, as well as some European banks. So it's a really nice bite-sized project that we want to get into production by 2029. Again, that's a very aggressive timeline, Bill. We've been very aggressive to date. So I'll knock on wood as I say that. Hopefully our luck doesn't run out, but that's certainly what we're going to be trying for.
So you're not completely out in the boonies. Tell listeners how close you are to some of the ports that kind of factor into what you might put in your feasibility study.
Yeah, so, it's really important for everybody to understand, lithium, right? It trades around $10,000 a ton. I think that's processed. But, phosphate is right now about $300 to $500 USD per ton. That's as appetite before it's processed. So you have to remember, you have to be close to infrastructure. Otherwise, the transportation costs and the logistics costs just kill the project. So, where we have our phosphate, it's not only high grade, it's not only in a good area, socially acceptable, but it's 70 kilometers, not by a straight line, but by driving, 70 kilometers driving distance from the port of Saguenay, which is an international port. Federal government's really interested in this port now. They just given $60 million to build a second wharf. And it's a deep sea port. It gets us out to our off-takers in Europe. Already 25% of our mine is fully and bankably off-taken to Europe. And, that's what's really important, is that we're really near logistics, and we're sitting in the Saguenay-Lac-Saint-Jean region of Quebec, which is traditionally an area for aluminum and forestry. So it's got great industrial workforce and great industrial suppliers in the area. So we're all really nice and tight in there. And the beauty that people tell us, to say they all want to come and work in the mine. You know why? Because they can live 40 to 50 kilometers away and commute for less than an hour back and forth. There's no need to leave your family for months on end and go work in the Arctic or in the north. That's going to be one of our biggest problems with all these mining projects, is just the workforce. So we've got it all there. And, there's already a mine in the area, an niobium mine. So people are used to mining. They're used to Rio Tinto's industrial facilities and all that. So we're really in great shape that way.
And with your offtake agreement, there's not a set price. I understand that to be floating, right? So the investors would still have leverage to the upside should the phosphate price run.
Yeah, correct. So our offtake agreement, both on the phosphate concentrate at the mine, and also we have a similar offtake on the second transformation to phosphoric acid. It floats with the market. There's no price floor and there's no price ceiling. Phosphate is a tremendously strong commodity. I mean, they're predicting massive shortages of phosphate to come, and as you know, without phosphate, a lot of humanity will perish. Unfortunately, it was something we don't like to say, but it's true. And also, the growth in phosphate has been like I don't know, 1,000, 2,000x since the 1950s. We just cannot feed ourselves without phosphate. So it's a market that's always going to have a really strong floor underneath it, which is very different than some of these other commodities that go into electrification, like lithium and graphite and others. Without electrification, the other uses are not as strong. But phosphate's got 95% of phosphate is just this fertilizer and food demand that's just insatiable.
With your current 30,000 meter drill program and your pre-feasibility study underway, what are you looking to gain? What intel are you looking to gain primarily relative to your PEA that you already put out?
Good question. So, as you know, 43101 is sort of bent towards gold, silver, copper, and sort of nickel type of mining, which is usually like long, thinner veins. Something like phosphate and something like what we have is like a big gravel pit. It's on surface. It's 2.5 kilometers long by 300 meters wide, and so far it goes down 300 meters. So we've drilled it all at 100-meter centers, and we know that it's all there. But due to 43101, you have to drill at the 50-meter centers to get it from inferred and indicated to indicated and measured. So that's what we have to do by 43101. And it does help us to define the deposit a little bit better. So that's what we're doing. It's a massive drill program right now. It's our last 35,000 meters precisely to just drill it all up, get it all modeled out. And then that allows us to then proceed into a feasibility study later this year.
And what would still be lacking from your expected PFS, pre-feasibility, to the feasibility that you would accomplish next year?
Yeah, so we didn't do much of we didn't do a formal external pre-feasibility study. We did all of that internal, and we're marching directly to feasibility study. And the reason for that, like I said, it's a very defined resource because it is phosphate. It's on surface. We're next to really good infrastructure. We've done a lot of research on our own in the area to the logistics, so we're comfortable to move directly to a feasibility study. And also, it's just the speed, right, Bill? You need to really get electrification needs to happen, and it needs to happen quickly. So this way, we're moving rather quickly.
And the goal, as you stated, would be, if everything goes well, be in production in 2029. You've also laid out in your presentation basically a fully integrated battery supply chain, because North America does not have that. We rely on a lot of that for China. A lot of the technology we get, the drones, the phones, those batteries all come from China. Now, pushing that aside, let's say you don't develop and an investor doesn't put value upon a fully integrated supply chain. How should they look at the upside from here? As we're speaking, your share price is about $1. I think the market cap is about 140 to 150 million Canadian. What is the upside for listeners just learning of the story today through this interview?
Yeah, so I mean, look, the stock trades somewhere by probably a 5 to 7% of the value of the PEA just of the mine alone. The NPV of the mine is 2.1 billion, IRR is 37%. We trade only like 7% of that right now. And, we're fully funded to get through our feasibility study and perhaps our permitting as well. We've got 25 million in the bank. So, I mean, the odds that we're going to get through this feasibility study and get into permitting are quite high. And as you know, that's very rare for anybody out there in mining. Usually only 1% of 1% actually get to a feasibility study, and even fewer actually get to a mine. So we're moving towards that. We're moving towards that really, really quickly here. And we're trading at a very discounted value to that. And so, and that's just one portion of the project. And that's just for the igneous apatite, which you could take all of it and you could sell it tomorrow morning. Everyone wants to offtake that on the planet because it is cleaner and it runs machinery very clean in order to make this purified phosphoric acid. And that's just one pillar, right? Then there's a phosphoric acid plant, and then there's the downstream LFP cathode active materials. So, I mean, there's just so much upside. And, I think that's reflected in some of the research reports that have come out of the company, even in the last week, reflecting, tremendous, potential for the company.
Yeah, what would be the type of company, or who would be some potential buyers of this deposit if they don't allow you to continue to progress down and a buyer steps in and says, hey, we like what we see?
Oh, you mean somebody who could acquire the company?
Correct. Yes.
Well, first of all, we're interested in bringing this to fruition ourselves. But if there were somebody that would be interested, I mean, there's going to be a massive squeeze on purified phosphoric acid, and people are going to wake up to the fact that even all the lithium in the world is not going to save you unless you got the P, right? So anybody in lithium, anybody's got major investments in lithium, right, that need to go to the next step. Okay, now we got the lithium, now we got the hydroxide or carbonate. Well, what do we do with it? Well, we got to make LFP. Well, you can't make LFP without the P. So everyone in those kind of investments is going to be stuck. And anybody in the data storage energy, the AI data infrastructure energy, the cell making energy, EVs, whatever else you want, they're going to need the P. So as soon as that happens, our industry around lithium is just starting to mature. But as soon as it matures, I mean, everyone's going to say, well, how do we make it now? We've got all the ingredients, right? But now we got to make the sauce. So anybody wanting to make the sauce is going to need the phosphate. And so we're just patiently sitting here, just waiting. We're doing our thing. We're developing our business on our own, and we see what happens.
You've kept the warrant overhang low. What does the share structure look like?
Yeah, we got no debt. We've got about 150 million shares outstanding. Like I said, management's 25% of that. Good family office money is about another 35-40% of that. And then there's about 35% that trades in the open market. Now, what's important about that is, we've raised all the money on our own. All non-brokered private placements, about 44 million of it to date. No toxic capital, none of this warrant clipping nonsense. We've kept the cap table really, really clean, and we got really good supportive investors in there. And that's key, right? We've really done the housekeeping well.
And your last placement, I think the warrant's good for 5 months. Is that right? I saw that. That's about the shortest warrant I've seen in a private placement recently.
Yeah, well, we're trying to get rid of the warrants. That was a warrant that was already outstanding from another financing. So once that warrant is done, there will be no more warrants in the company outstanding other than some small warrants that some of the management owns. So that's what we're trying to do. We're trying to get to a level where there'll be no warrants left in the company. And I think that's quite a success. I'm a little bit of a neat freak, so I want to keep the cap table clean. Our board supports me in that. So maybe we'll get to a level where we don't have to issue warrants anymore at some point.
You have a lot of momentum right now, especially in the share price. The shares were 30 cents earlier in the year. They were 70 cents 2 weeks ago. They're over $1 as we chat. What do you attribute that to?
Again, like I said, people waking up. There's no LFP without the P, right? But you got to remember too, one of the big hits was China. They came out and they said three things. We're going to stop rare earths exports. We're going to stop microchip technology, and we're going to stop another thing called LFP technology. So they don't want to export LFP technology to the west, nor LFP cathode active materials, because it's a massive business. These guys got it right now. It's $100 billion, and it's going to $1 trillion very shortly here, and it's all controlled by China. It's probably the biggest single export of anything, because these big energy systems like California's energy grid, that's all solar. They take down the solar energy during the day, but they have nothing at night, so they got to store what they take down during the day so they can redistribute at night, and that all goes into these massive battery parks, all built on LFP battery, and all that comes from China. So I mean, it's one of China's biggest industries. And we want to onshore that here, very quickly and desperately. And you know what? We've done it, right? Like, we've done it in small. We made 150 of these. We cycled them 2,000 times.
You're holding a battery in your hand for audio listeners?
Yes, I am.
Yep.
Oh, audio listeners. Okay.
Yeah, there are a lot of people listen in audio form only. Yep.
I see. Okay. So this battery that many can't see was created here in North America with North American critical minerals, of which are phosphate, and it hasn't been done in 25 years because we developed the technology in North America, and then we quickly lost it to China within a year or two. And it's only been made in China, so we're trying to bring it back. But this proves that we can bring it back. We can do it. We have the critical minerals to do it. And that's what we're doing here at First Phosphate. That's our modus operandi. But it's a massive industry that China has a stranglehold over. And can you imagine if a small company, First Phosphate, is able to do this? What is our value? What is our valuation worth? This is why you're commenting about the share price. I mean, or the share appreciation. People are starting to wake up to the fact that, wow, this is important. If China's saying we're going to cut it off, it means it's important. Who can do it? There's no other company that I know of out there in the Western world as far advanced as First Phosphate and as vertically integrated in terms of mine all the way to possible production of the LFP battery on igneous phosphate and phosphate just for the LFP battery industry. Just do not care about fertilizer. So, I mean, when the lithium boom started, when the graphite boom started, everybody was looking for the leadership companies. Who are we going to go to? They were going to go to an Albemarle. Are we going to go to a Nouveau Monde? Where are we going to invest in? Who's the leader? They're starting to come into space and looking at phosphate. And there's, it's not only like who's the leader, but there's very few companies there. And there's only one company that's as advanced and as focused as we are on this every day developing this.
First Phosphate has a lot going for it right now, but I've been a mining investor now for a decade, and I know that Murphy's Law works overtime, even with good people. What are the most likely things to go wrong, and how would you address it if you were faced with it?
The most likely things to go wrong is just governments meddling and making a mess. And it's not something that you can really stop, but, we have an active government relations team. We work the best that we can with government, both locally, provincially, and also federally, and also internationally. And we just try to educate and try to make sure that governments are making the best decisions. I believe that operationally, our team is strong. We're committed, and we got this. And on the governmental level, they're starting to get a good understanding, and just moving down the field. Like we'll do a touchdown like 1 yard at a time. Like it doesn't matter. We'll just keep pushing the ball down the field. So the only possible thing that could go wrong is just policy, right?
So no geological surprises or inability to finance.
No.
You don't anticipate those as being issues.
Yeah, look, financing is obviously an issue for all of these companies, but I mean we've got a small capex. We're reasonable. We're smaller project, which is locally acceptable. It's only geared towards LFP battery, so we get the capex about as low as you could get. It's about the smallest type of capex that you could have. It's under $500 million to get this mine going. It's extremely lucrative once it gets going. And so that's what we're focusing towards. We've got already EXIM Bank at the table for $170 million letter of interest. Quebec government's got interest. Like I said, Canadian government as well, European governments, especially the governments that are tied to our off-taker in Europe. That's definitive offtake. So I think it gets done. I think right now the really important part for this company is to get through this feasibility study and these permits as quickly as we can. And this is why we raised this money. We took this time to really raise a good amount of money, $25 million that we have in Treasury right now, to have our war chest, to be able to cross what people call the valley of death, right? It's between the PEA and the feasibility study where everything falls apart and companies get involved in toxic capital and this and that. We don't have that. We got cash. We're ready to go, and we're going to get this done.
First Phosphate is a new show sponsor. We'll be covering the progress over the next year. The website to learn more is firstphosphate.com. Ticker symbol on the CSE in Canada is PHOS. And in the States, on the OTCQX, you can find it under the ticker FRSPF. John, really appreciate this introductory overview of the company, and I look forward to covering the stock over the next year.
That's excellent. Thank you so much, Bill, and such a pleasure to be with you and your listeners.